Joe Tigay, portfolio manager of the Rational Equity Armor Fund, is with us. And some of your thoughts on retail, the consumer, and we've seen somewhat of a mixed bag. Some of the retailers coming out and sort of crashing and some really taking off.
Hi, thanks for having me. I will echo your sentiment. I love Kevin Hicks too. I think it's awesome to see him down there on the floor. It kind of makes me jealous. I want to see the floor again. But yeah, back to retailers. Very interesting to see. When I got this assignment to look at ROST stores this morning, I was expecting them to be negative because I'm thinking of a lot of the other retailers which are having a hard time. That's not the case for ROST stores. Really great chart, closing in on all-time highs. You back that chart out, 5-year chart looks even better. Just continually growth. They're upping their dividend. I think that's exactly what investors wanted to see. But for me, you know, we are heading into earnings here. We have had a really big run recently. I just want to tap the brakes here, collect a little premium here on the very short time frame. Just looking very shortly, just out the rest of this week, looking at a 155, 160 call spread, very narrow call spread. So I want to sell that call spread, collect a little premium into this earning. I think volatility is elevated across the market and in this name into earnings, and I think it's reasonable to just have a little bit of a heat check here for ROST stores and collect that premium and keep it. Keep it quick, keep my money on the sideline here and wait for another opportunity.
Yeah, I mean, while it's about $10 off the highs, it went on the lows. It was at 122, and now it's at 152. It has had a lot of momentum to the upside. I guess that contributes to your thought that maybe it could pause a bit. I mean, I'm just looking at 3 months, it's up 11%. It's had it's 1 month, 10%. It's had a pretty good run.
Oh yeah, had a great run, into this earning. Really good, response after talking about the dividend. So I think a lot of that's baked in. People were expecting a lot of this to happen. So I don't think there's gonna be too much of a surprise to the upside out of this earnings event. I am cautious. I'm concerned because there's a lot of other retailers that are performing poorly right now, especially in the apparel space. So I am concerned maybe downside. I didn't want to turn this into an iron condor where I'd also sell a downside put spread, collect a little more premium. I'm just neutral to negative on the very, very short term here into this earnings.
Yeah, understood. All right, so we'll get details on that, folks. We'll have that for you here after the bell today on Schwab Network. What a big picture about the markets. We've been talking a lot about the rate environment pressuring stocks. Can stocks ultimately go higher if rates sort of stop here?
I think they can, but I think it's good that the rates have stopped here. Yeah, the rates are, as you said at the top of the hour here, or the bottom of the hour. You said. Sorry, the top of the, you said these rates are critical. They are what is most important to this market. We saw them sell out this morning. There was some concern after the budget bill. People are looking through what's happening on the House, saying it's likely to have something similar to it, maybe not identical, similar to it be the final bill. That's going to be a lot of spending. That's exactly what the downgrade was about, a lot of spending. But I think we're going to get to a point where we're just kind of past the downgrade and just looking at the big picture. When rates are kind of high for the U.S., that does actually attract some buyers for U.S. debt. I don't think anybody around the world really seriously thinks the U.S. is going to default on their debt. I think it's more about inflationary issues. When you get paid back that debt 30 years from now, your dollars, will they be worth as much? I think that's a different story. I think in the short term, maybe this is another couple of weeks of people kind of figuring this out. But ultimately, I think the money's going to come home back to the U.S. At these higher rates. People are going to say, "Hey, this is a no-brainer. I'd rather own the U.S. debt than anywhere else around the world, especially as these rates are higher."
Right, understood. Just quickly, I mean, when you're investing and you're looking, I mean, there's one thing for trading and one for parking your money a bit more. Do you have certain sectors that you lean towards or what you like lately?
Yeah, well, for the past 3-4 years, I've been really leaning heavily into this tech, into this AI, and the chips. I have not changed that outlook yet, even though we've seen a lot of volatility in that space. I've not changed that outlook. I'm kind of looking forward to the best case scenario for the U.S. economy, which is certainly a very realistic possibility when we get past this little hiccup with this downgrade is number one, the economy does not go into recession. In fact, it stays robust. And actually, there has been no signs the economy is going into recession. So that's number one. Number two, we get a new budget bill, which is actually stimulative to the economy with tax cuts, deregulation, and all the above. That'd be fantastic. That looks very likely. And then number three, inflation stays low, which paradoxically, these tariffs which have been coming on has led people to flood the U.S. market, which has caused some of these prices to drop. So inflation stays low. That's going to allow the Fed to lower rates. So we're going to get the monetary and fiscal stimulus without a recession. I think the best case scenario, ironically, nobody's expecting it, is actually there. So we could see better than expected growth going forward. And I think you're starting to see a little bit of firming up. Surprisingly, lately, we're seeing tech stocks outperforming value stocks lately. So I think maybe there's a sign here. Maybe there's some potential to see the market rebound here and look for all-time highs sooner rather than later.
All right, Joe Tigay, great to see you. Thank you, Portfolio Manager of the Rational Equity Armor Fund. Thanks.